So this video is sponsored by Pionex, one of the exchanges I use all the time. It's one of the main crypto brokers to Binance, so the volume is very high. The main thing that sets them apart though is that you can use free trading bots, a variety all designed to benefit from different market behaviours, whether that's up, down or sideways. You'll get 20% off all your trading fees for life with my link in the description. And if you join the Telegram, a lot of us already use it, so if you've got questions we can try and help you out.
Good morning, everybody. Let's have a look at a little bit of everything. We've got the Patreon live stream tonight for those who want to join. It's links in the description below, where we'll look at all the charts it is you want me to look at. But what I would say is that if we just have a little think about what I'm going to say now in advance of that stream, it'll help us digest what's going to happen in the short term and the long term, right? So let's put it into let's paint the picture, right? So this in my opinion is the deal. So far we've started to break down a little bit now from this rising channel, the ascending channel, the rising wedge, whichever way you want to paint it, broken down now from the euro to USD. It's not a big deal. It's if anything, it's going to be a bullish retest either on a 4-hourly or a daily. 4-hourly will bring it down to what 107.2 give or take. So obviously these moving averages are moving up quite sharply. We've also got the Bollinger Band Center and the 21 exponential coming in at 107.9. And if we were to lose those areas, 106 seems reasonable. And again, all of these areas are just going to be what I would consider to be bullish retest of a continuation of a trend, right? So these are the things that we've been waiting for a little while. Again, this is a small term time frame formation that we're in, we've broken down from now. So we shouldn't expect massive moves from it to break down from, but it's nice to see that the euro is coming down and the markets are coming down with it. Because my big fear was that Bitcoin, S&P were going to start to come down first, and then the euro comes down to push it down further than they needed to go. Whereas it's all moving down together, which is the best scenario, which means that if we reach supports on the euro at the same time as supports on Bitcoin, it's the same time as supports on S&P, then the likelihood is these dips are going to get bought pretty nicely across the board, whether you're a Forex trader, indices trader, or crypto trader, or whatever, the dips should get bought. And to be honest with you, I think it's a dip buying market. To be honest, I know that might go against what a lot of people say. I know that's going to emphasize a lot of what the Moon Boys are saying, which is fine. And I'm going to show you something on the long term for Bitcoin as well to emphasize this. But again, without having to rehash things I say every single day, and everything I've been saying since we reached this low on the S&P, I think this is the low for stocks, the S&P. I think this is the low is in here, right? Even if we come down for a double bottom at some point down the line in the summer or later, still going to be a significant low. So thinking about investments and things like that for a long term, I think this is going to be something we could look back on, in years to come and go, wow, what an excellent opportunity that was, right? Now I know there's always going to be threats of black swans and whatnot. That's fine. These things can't we can't break away from the threat of a black swan. But charts would suggest that the low is in there. So Dixie having a little bit of a bounce again, coming up to its resistance is exactly the opposite of what's going on with the euro to dollar, obviously. And so if we're going to get rejected, we'll get rejected around here, which is almost where we are right now. Again, thinking about the pullback that's taken place for the euro from here to here is just less than 1%. And if we were to measure the Dixie, we're going to have to stretch this out a little bit because we're looking at this on a daily. If you think about where we are right now, from here to here, it's not even that. It's minuscule. Obviously, there's more to the Dixie than just the euro, but the euro is a major component. And again, yen is still massively weak. So anyway, that's enough of boring stuff with traditional markets and Forex. But it's like I say, it looks like a dip buying opportunity, for everybody. So on the short term then for Bitcoin, we're still pretty much bullish, to be honest with you. We found a significant run up here on the short term time frames and a breakdown from it. It's not really much at all. The 50 exponential so far is holding. Even if we were to lose that, we come back down to this major area, about 21,500, which, to be fair, I think scaling in from that area would be reasonable, to be honest. Again, spot trading, long-term stuff. I'm talking for just getting your foot back in the door, really, for Bitcoin. It's been very, very strong, very significant. Now, obviously, we all know the FOMC meeting is around the corner, so I think a lot of what we're seeing right now on all these markets is a little bit of profit taking, leading into whatever they're going to say. Is it going to be 2.5? Is it going to be 0.5? What's it going to be, man? Well, no one really knows. the talk in the town is that it's going to be 0.25, and that's, I think, why we've seen such significant runs and strength across the board, including dollar weakness across the board. I think that's basically it. So to be fair with you, it would appear that the market has priced in that, and so when that actually does come, we actually get that, you might see, well, you probably will see some craziness, some spikes up, some spikes down, and a resettling, and then, you know, appropriate trading ranges can take place again shortly after. I still feel as though it's probably a sell the rumor, you know, buy the rumor, sell the news, sorry, regardless of 0.25. If they go 50, so what? Let it be. It's still a good looking chart. I don't see, especially with the stimulus and things that Biden's decided to inject into the economy, the infrastructure and stuff, and all of this madness that's going on over there. They're still throwing money into the system, like incredible amounts of money is just still going back into the system, despite the deleveraging, you know, generally across the board. So I still think that this is a dip buyer's opportunity for all. And if we think about this in terms of Bitcoin's longer term timeframes, yeah, so we've got this here, it is feeling a lot like the 2019 beginnings of the bull run. So yeah, we had pullbacks on this one when he started. But the general run went on way beyond anything that anyone ever expected, and then consolidated for an inordinate amount of time. So this could just be the very start of what is going to take us into the 30,000s and you know, mid 30,000s potentially. I can see that. I can see that potential just by standing back and admiring this chart. I'm not really suggesting anyone goes 100x at this very moment in time. We're very much connected to everything, so Forex and indices, which is why I like to lead with those charts and those concepts before we even look at Bitcoin, especially even altcoins. It's all very much interconnected at the moment, as Bitcoin and crypto is seen now as a risk asset rather than a commodity. It depends on which time frame you're looking at it. To be fair, I would probably go down the lines of a commodity on the long term, risk asset on the short term. But again, trying to call it or match it to any existing, you know, asset is pointless. Bitcoin is Bitcoin, and it's going to do what Bitcoin does, which is why we like to trade it more than the other things, right? So long story short, yeah, 21,500 seems reasonable to see that we'll get a pullback into that level, maybe even today, tomorrow. Again, there's going to be some madness going on with the FOMC meeting and stuff. We've just got to leave that to be what it is. I still feel as though buying the dip is the most appropriate way to treat this. We've got the 200 exponential on the daily sitting comfortably at 21,200, which is in this zone, this buy zone. I will definitely call it a buy zone, right? No golden crosses on this daily here, but it's a buy zone of significance, and it ends at around 20,500. So about $1,000 worth of wiggle room, yeah, for your buys, for buy orders. Now, I'm not suggesting you buy anything. You do what you want. But the way I'm seeing it, looks pretty decent to me to expect continuation over the short and on the long term now. And what we're seeing now is a bit of a de-risk consolidation leading into the event. And then we'll get picked up after the madness is finished. So, again, I'm very much in favour of all of this. Continuing, but not without a bit of a pullback, which is what is occurring already today, and still focused on the euro for the major dip buying opportunity. Now, just before we finish, the overall for altcoins, this is Bitcoin, Bitcoin including all the altcoins, so the total market cap just sitting just short of $1 trillion. And again, it's more or less a Bitcoin situation. So we've got the 10 exponentials where we've been supported on so far. We've got the 200 and the 20 and the 21 sitting around 965 billion. So a nice area of support sitting around that level. Again, focus on all of these charts will give you an idea of where to buy dips in the markets, right? But if we turn our attention to total market cap 3, which is excluding Bitcoin and Ethereum, so this is everybody else, we will be looking for this one to come down to probably a little bit deeper if it doesn't get supported here, to be honest with you. But personally, I'm thinking a little lower over the next couple of days, and dips to be bought roughly around 352 billion for all the other altcoins. So without looking at every single altcoin, which is what we do on these live streams, that'll give you a rough idea about where the market, the crypto market, might find a bounce. Obviously, you know, if you've not been around in the market for very long, the market trends as one. And some altcoins move massively in compared to other coins, and rather than looking at absolutely everything all the time, trying to work out who's going to do what, sometimes looking at the market as an overall, as a blanket move is probably one of the best things to do, just to give you an idea of whether or not your altcoin is to be taken seriously, or if it fits into the broader narrative of a market bounce. And the market bounce looks quite reasonable, and a quite a decent place to expect it, which is only a little bit further down from where we're at right now. A couple of dozen trillion, billion, but that's just a tiny little blip on the chart. So let's just allow for these things to come down leading into the event, especially with the euro. The euro will be the ultimate buy the dip opportunity, and I will think about looking at all these other charts as soon as we approach this what we'll call it 107.2 area, which is a 4-hourly 200 exponential. Be another retest of the golden cross that already got retested over here. We had a very nice bounce from there. I'll be looking for that to be retested once again over there, and if that fails, still no big deal. The biggest retest, the best buy the dip opportunity on the euro will be anywhere from the 50 exponential sitting around here, which also is just above this previous level of resistance stroke support, basically 106. And if that breaks, still no big deal. I would be looking to go pretty hard around this level. However, I don't think that that's going to get reached now. But if it were to, yeah, there goes the kidney on the darknet. I'm going to put some money on this for what I would expect to be a decent bounce. And the beauty of coming down to an area like this for a bounce is it doesn't take long to know if you're wrong. Stop losses can be pretty tight at this level, to be honest with you, because if we bounce from here, we bounce really well. We bounce back up, to where we came from and beyond. If it breaks down, it's probably going to go down quite a bit lower. And like I say, your stop loss does not need to be wide at all. It can be very tight. And this, I would look at this as a good way to think about all markets. Not that simple, obviously. You do have to look at all the other charts before you make any decision. But the euro, as far as I'm concerned, is going to govern the general health of upside for all other markets. And again, the reasons for that I've gone into many, many times. It's not that the euro has a great deal of weight on anything. It's just a way to trade Forex, a way to trade Dixie rather than looking at the Dixie. Anyway, I'll leave it with you there. Thank you for watching. Hope you have a nice day. Maybe I'll see you on the Patreon live stream tonight. Maybe I won't. Either way, I hope you have a good day. Take it easy.